We're back on Morning Trade Live. Let's focus on PepsiCo. The beverage and snack giant will be in the spotlight tomorrow morning when it reports earnings before the open. Shares are down more than 5% this year and are down 15% over the last 12 months. Let's take a look at beverage stocks across the board. This is your daily dose of caffeine for the day, but Celsius seems to be the only one that's getting a bit of a caffeine injection, up 1%. Monster Beverage can't make up its mind today on the flat line. We've got Coca-Cola and PepsiCo both lower ahead of those all-important earnings. PepsiCo is the focus of the morning trade. Joining us now for a closer look is Schwab Network host Marley Kayden. What are the expectations going into this report card tomorrow, Marley? Good morning to you.
Good morning, Sam. Yeah, expectations for Pepsi, like you said, they released before the bell. EPS expected to come in at $2.27. Now, the year-ago quarter came in at $2.31, so this would be a modest year-over-year decline in profitability if it comes in line. Revenue expected to be slightly higher year-over-year at $23.88 billion, which would indicate that while sales are growing, there may be higher costs or margin pressures that are weighing on earnings. So a mixed but potentially stable outlook for the company if those come in line as well. For North America, looking for beverage revenue around $7.24 billion, food revenue just above $6.5 billion. Latin America is supposed to be a bright spot for them. Latin American food revenue is supposed to come in at $2.62 billion. But in terms of Pepsi's performance this year, it hasn't offered much to shareholders. It's down about 8% year to date, about 1% over the past month. And as we know, the broader markets have rallied. If you look at it against its industry peers, which you took a quick snapshot of today before we started speaking, but beverages, soft drinks has seen a modest gain of more than 1%. But Pepsi has seen a decline of about 18% in the last 12 months. So really underperforming the broader sector that it's in. And that has prompted some scrutiny over the company's strategic direction and its operational efficiencies. So a lot of eyes on these earnings right now, Sam.
Yeah, it's important that you highlight the underperformance. And, obviously they've been contending with just a number of challenges, everything from the more sort of health conscious consumer with whole GLP-1 sort of phase that we're entering right now, the competition from the energy drink companies, and also, of course, the tariffs with some of that packaging. So what are the analysts sort of saying ahead of these earnings and sort of attributing some of the underperformance to right now?
So not a lot of change to how the analysts are anticipating the earnings. The only one, JP Morgan on Monday, they maintained their neutral rating, but they did lower their price target to $157 from $151, which does still imply some upside. Right now trading at $139. But as far as where they fall, 31% of the analysts who cover Pepsi have a buy rating, 65% have a hold rating right now, and only 4% have a sell rating. So neutral to bullish right now on Pepsi, perhaps in part because of this stake that Elliott has taken in it and sort of what direction that may take them. But certainly not strong on the sell side, more in the neutral camp.
Okay, thanks so much for that, Marley. I'll speak to you a little bit later on. Let's trade it now with Scott Bauer, CEO of Prosper Trading Academy. How are you approaching your example trade for PepsiCo ahead of this earnings report, Scott?
Yeah, there's a lot of resistance technically right above where we are right here between like kind of 142, 144 area. Market's pricing in about a $5.5, $6 move this week. So I am looking to buy a diagonal put spread. Now, when I sent this trade to you guys just a little while ago, the stock was a bit higher. But what I'm looking to do is sell this week's 135 strike put by next week's 137 strike put. I was looking to do that for about 80 cents. It's trading closer to $1 right now. And I still like that trade, though, because I really think that resistance that we've seen there, which is pretty strong, it's both the 50 and the 200-day kind of converging right there. I think it's going to be a tough go to get through that area there.
Okay, a good look at PepsiCo ahead of that report card we'll be getting out tomorrow morning. Under pressure today. Just wondering, what are your sort of takeaways from the market? We're seeing a bit of a rebound on the headline. What are your thoughts today, Scott?
The same as they've been. I mean, this market is really a Teflon market, and it's still been really by the dip. The trend is still higher. You get asked all the time, we're at a top. When's it going to stop? And, I wish I had that answer, but I would say that overall volatility is still pretty cheap, even though we saw the VIX, tick up a little bit. So, it's still a good time, in my opinion, to buy some protection to the downside here. But, heading into earnings season here, pretty optimistic expectations for the market.
Well, you guys are the closest thing we have to a crystal ball, so I really appreciate your analysis and insights and what you're seeing out there, Scott. We'll catch you a little bit later. Scott Bauer, CEO of Prosper Trading Academy.